A smart trader or investor would always look for supportive data when deciding to buy in or sell out of the cryptocurrency market. There are multiple charts to look at, market sentiment to tap into, and fundamentals to analyze. However, it isn't the most effective use of time to examine every metric and index that is available. But, with the Crypto Fear and Greed Index, you can measure how the general market feels about crypto assets. So, stick around, guys, because today, we'll explain this indicator and tell you how it works. Hey, everybody. Welcome to the Millionaires Club. Here you'll find promising millionaires determined to learn more about financial markets and business spaces. If you happen to be new here, don't forget to subscribe to our channel and hit the bell button, so you don't miss out on a single video. Now, let's get right into it. The Crypto Fear and Greed Index. How does it work? The Crypto Fear and Greed Index was created by the investment analysis website alternative.me and started working on February 1, 2018. It measures investors' sentiments toward the market and determines whether the market is bullish or bearish. Each day, the website alternate.me calculates a new value from 0 to 100. As of July 2021, this index only uses Bitcoin-related information. This is because BTC's price and sentiment have a high degree of correlation with the overall crypto market. However, there are plans in the future to include other large coins, such as Ether, ETH, and BNB. This index is measured from 0 to 100, with lower scores indicating fear and higher scores indicating greed. A score of 0 to 24 indicates extreme fear, meaning that investors are selling in large quantities and leaving the market. A score of 25 to 49 indicates fear, meaning that some investors are selling, and market interest is relatively low. A score of 50 to 74 indicates greed, meaning that significant buying is happening. Finally, a score of 75 to 100 indicates extreme greed, suggesting a very hot market and a potential for a market bubble that might soon burst. The Crypto Fear and Greed Index calculates the value through 6 different weighted market factors. Number 1. Volatility, 25%. It measures the value of Bitcoin using averages from the past 30 and 90 days. Here, the index uses this factor as a stand-in for uncertainty in the current market. Number 2. Market volume or momentum, 25%. Market momentum is the rate of acceleration of the market to gauge the market sentiment. The market momentum can actually go in an upward or downward trend, which can be later confirmed by changes in trading volume. In other words, the greater the market volume is, the more investors participate. This item can be calculated from the present market volume, using the averages of the past 30 or 90 days. The higher the buying volume in a bullish market, the higher the greed factor. Number 3. Social media, 15%. This factor examines the number of Bitcoin-related hashtags and, particularly, its interaction rate on Twitter. Typically, a constant and uncommonly high number of interactions has more to do with market greed than fear. Social media also encourages multiple forms of pump and dump. For example, online posts that appear to contain useful information may encourage purchases of a crypto asset. When FOMO spreads, and buyers get on board, increasing the asset's value, the manipulators who previously posted the information can sell their shares and sharply lower the price. Number 4. Bitcoin dominance, 10%. Bitcoin is king in the crypto market. BTC's dominance is actually reflected in its share of the total market cap. A large dominance of BTC can stand for an unstable market, as many investors might shift their assets from risky altcoins to Bitcoin. In this situation, Bitcoin is regarded as a haven, protecting investors from a sharp drop in prices. This factor can also be interpreted very differently because high levels of investment in BTC can also indicate a secure market environment. Number 5. Google Trends, 10%. The index can offer insights into market sentiment by examining Google Trends data for BTC-related search queries. For instance, an increase in BTC scam searches would suggest more fear in the market. Historically, increases in BTC-related Google searches have coincided with extreme volatility in crypto prices. Number 6. Survey results, 15%. Surveys are good for directly querying the sentiment of crypto market participants and other interested parties. The surveys were conducted on some third-party websites at regular intervals. Since the selected sample represented a group of crypto investors and traders, these surveys help to estimate the general market sentiment. This factor has been paused for some time. So, that's basically it for today. If you enjoyed today's video and found it helpful, make sure to go ahead and smash that like and subscribe button for more crypto news and updates. And now, is the crypto fear and greed index a reliable indicator? Let us know your opinions, experiences, and arguments in the comments section below.